Hello, everyone. Good afternoon, and welcome to our midday market update for Thursday, February the 16th of 2017. My name is George Papazov. I'm the founder, owner, and head trader here at Trade Pro Academy. We're having a great day trading so far with the group in our live trading floor. Today, what we want to discuss is this hedge fund that single-handedly caused this rally or ignited it at the very least. They were the match, the catalyst. And that name's going to come back in a second, but for the rally and the short squeeze. I'm going to explain to you why, who it is, and what really was the mechanism that triggered all those buy stops and caused the rally, and what it means for the future, because I think it's over. That period's over, and we're gonna analyze that information. All right. Remember, the information in this presentation is for educational purposes. It's not constitute investment advice. The risk of trading markets can be substantial. You should carefully consider if engaging in such activities suitable to your own financial situation. Trade Pro Academy is not responsible for any liabilities arising as a result of your market involvement or individual trade activities. All right, let's get started. So first and foremost, what has the market done? Well, in the last little bit, the market has absolutely ripped higher in the last few days. Yesterday, during our midday market update, I went out there and I said, call it. I think we've hit a high around 23.40 or something around that range. And yeah, maybe it was a little premature on it, but we have 1, 2, 3, 4, 5, 6 days of upside momentum. This morning when I started our trading room, the first sentence I used to open it up was, I said, today I got a feeling it's going to be a down day. All right? We've just gone up too much. I think people wake up this morning with a hangover and saying, wow, I own a lot of S&P 500 stock. My goodness, I got a little ahead of myself. I might have to sit on this for months, and they're going to unwind the trade. Well, just yesterday into the close, a big piece of news came out, a massive news item that you had to be aware of to have known that there was going to be some downside pressure today. All right, there's a fund out there called Catalyst. All right, I told you that Catalyst term. The fund name is called Catalyst. They had a great 2008 year. It was a hedge fund, and then things have kind of taken off since to the downside. Edward Walczak is the trader who uses options a better risk and return profile. So their strategy and mandate is to use stock S&P 500 options in order to manage their risk to reward profile. Look, selling options, when people find out about selling option strategies, they go nuts. They freak out. You mean I could get paid every week? Yes. You mean 93% of the time I could collect that premium? Yes. But what happens on that 7%? That's called tail risk in the business. What happens on that tail risk if you're speculating on writing options premium? Here's the short option portfolio on what it looks like on an account balance. That's how these things work. You're getting a lot of premium, but that 7% of the time could really bruise you. And you get used to winning 93% of the time, so it'll come back. Well, this Catalyst fund was short options to the tune of $17 billion on the S&P 500. What that means is they have a short gamma exposure. Gamma is the rate of change for the rate of change of an option. If an option moves if a stock moves $1, how much will the call move and how much will the put move? That's called delta. That's the rate of change of an option according to the stock price. Okay, quick options lesson here. If it was to move $2, the delta would change. The delta would increase, and it's not proportional. So the rate of change of the move of a stock compared to the option, the rate of that change is called gamma. It's a delta of delta, essentially. What gamma means is, all you need to know is whether you buy a call option or you buy a put option, at the end of the day, you're long gamma. You have gamma exposure. Options at the money have the highest gamma exposure with the shortest expiries. Now, why is that an interesting thing? Well, if you want to make some money, the problem with gamma is if you have gamma, if you own a put and a call, any move in the market should essentially trigger a profit for you, right? Right. But the problem is if it doesn't move as quickly, and not just if it doesn't move, but it doesn't move as quickly as your expectation, then you're going to actually lose money in the premium. That's called time decay. The more time that you sit on a trade in an option, the more money you lose. And as you approach the 30 days expiry, it falls off a cliff. Your time value just erodes. I'm not going to go into that, but what you need to know is traders out there who are long S&P 500 and hedge funds short options up top because it brings in premium. They own the asset and they say it's not going to go up very fast. At 2,300, they'll say, what are we going to get? 23, 25, I'll sell those options. So around this range, when we're bouncing around, they expected some sideways movement or down movement. They were not expecting this rally. No one was expecting this rally. I don't care who you ask. Nobody expected this rally. These guys are out here selling call options, selling 20s, 30s, 40s, 50s. Great. They've sold them. They've collected premium. I'm going to ask you guys in the room, when you sell options, you're a seller. What do you have to do to close your position when you're short options? You got two, well, pardon the pun, you got two options. One is buy back your short calls. Or the second option is buy the S&P 500 futures. Close off that trade. If you're short one call on the ES index and then you go out and buy one call or one ES future rather, now you've got neutralized delta. You've actually hedged off yourself. There isn't as much risk. You close it off. So what's happening here is this hedge fund was selling the crap out of these 2340s, 2350. They have 60s, they have 80s and 85s on the way up. So they have more. But the question is whether or not they cover them. This hedge fund is shorting the crap out of this thing on call options in the market, and this thing goes and pops. And this thing goes and pops. Now he pulls in some of the algos. They start buying. The algos start buying. Some of the retail traders and hedge funds say, holy crap, this thing's moving. I can't be left out. If you're a hedge fund and you got cash sitting on the sideline, you can't sit there and tell your investors, I missed a 5% move. I was in cash. It's the last thing you want to tell your investors. You're charging me 2% admin fees and 20% performance fees, the 220 model for that. So what ends up happening is, what happens? Hedge funds start chasing it. They start buying. All right, now the sell offers disappear. The offers are gone. All you see is work on the bids. Bids just getting plowed in the market. Now it's getting stuffed on the bid side. Algos are stuffing bids, pumping this thing higher. It works. It goes up. It goes up. It keeps going up. More shorts have to get covered. More call options have to cover. Those call options cause more S&P 500 buying. More cash from hedge funds jumps on board until what happens? It melts up. The market melted up the last 6 days. 6 consecutive day rallies. Now this hedge fund catalyst, and Edward Wolchak says, we're done. We've covered our position. This morning, Mark Faber goes on the wire on CNBC. Typically, I say CNBC is a complete waste of time. I never listen to CNBC. Luckily, my news source tells me what CNBC says. Mark Faber said, Catalyst Fund has finished adjusting its portfolio, covering their short call options, which may have contributed to recent stock market strength. Uh-oh, that's not good news at 10:43. Guess when the market goes and plows? Let me go show you and go back. What ends up happening? 10:43, this news hits. I'm going to go in here, like 10:44, do a little stutter step, and the market finds this out, and everyone that got long runs for the exit. That's what the sell-off is based on today. We needed this sell-off, and I think there's more coming today. All right, there's our trades. You got long down here. We sold some up here, got out of that position, and now it's going down. Going back down, I think. Yeah, there it is. All right, everyone's scrambling for the exit. Why? And I could have told you this literally when the second day of this massive rally. I told you one thing. I don't remember it, but I said I'm concerned that on this rally to the upside, volume's low. You're not getting participation. Retail crowd is not jumping in. This is not a rally based on people jumping into the trend. This is a rally based on shorts getting squeezed. I said that. All right. I didn't know if it was hedge funds. I didn't know who it is, but I could tell you one thing. Somebody's getting squeezed out of a massive position. It's a squeeze job. Get a wet towel, twist it and turn it, and less drops come out to the point you say, yeah, whatever, this is enough. You throw the towel away. That's what just happened. Massive squeeze job in the SPOOs and S&P 500. That's what led this rally. And when volatility popped in yesterday's market, I told the guys who are trading for like careful out there. Volatility going up along with gold spiking and market on highs usually doesn't end well. That's usually a moment of at least some downside. Those are the factors that made me look for shorts this morning. Off the open, I was looking for shorts. Oil prices holding steady. So yeah, you need to know that. I don't know if this is news or a revelation to anybody, but you have to be aware of what caused this rally to begin with. And now it comes out. Imagine somebody's saying it's hard to see on YouTube. What's hard to see? Imagine getting squeezed out of that position on your account. Imagine having $17 billion notional exposure and getting squeezed out of it. How does it feel? It feels like crap as you're chasing the price higher. I've run a short option portfolio before, right? It's great. For the time that it works, it's great. Made 10, 15, 20%, 30% in 1 month. And then the China news came out and this thing leaked out and it got smashed. All those gains got given back. I know what it's like to be short volatility and short premium. It works until it doesn't. And what you have to do is have a switch to turn it on and off. This guy just got bled out. His fund, you want to know how it's doing? You should never be happy about somebody's. This shouldn't make you feel good, but you should realize that if you're losing money in this and it's going up, imagine what this guy's doing. 1 week performance down 14% on his fund. This isn't $100,000 we're talking about. This is a multi-billion-dollar fund. 1 month, 12% down. 3 months, down 16%. Year to date, down 13%. 3-year total performance, negative 1.08. You just lost 3 years of gains on your investors in 6 freaking days chasing your short call options. All right? It works until it doesn't. And when the market finds out that you have that kind of position, believe me, they're gonna make you chase it. You think this is a place of nice guys? The market found that out. Algo said, uh-oh, I smell desperation. Somebody's trying to cover a short. Let's make them pay for it. I'll buy it. I know they're buying a lot, so I'll buy small. And as they buy, they'll be the ones that make me fly higher. I'll make them pay. I'll make them pay up for that. I'll make it hard. I'll make it expensive for them to exit that short. I'll make sure they get spanked, and I make money off it. That's the market for you. Careful. That's over. That fund has now said short covering is done. Now you got your biggest buyer that pulled out. Your shorts covering was your biggest buyer in the last few days. That buyer is out. They've neutralized their portfolio at massive losses. Now the question is, who else got long up the ladder here? All right, who else got long up the ladder? And how long are they willing to stay long? And are we going to reverse right on that position now that the biggest buyer is gone? Now we need retail to jump in. Now we need to convince people that it's time to buy in the market. Turn on CNBC right now and tell me somebody on there isn't talking about buying stock. Well, you don't want to miss out on this Bank of America rally. You should buy more. Tell me that's not what's happening right now. That's exactly what's happening. So be careful out there. All right, be very careful. I think the biggest buyer just got pulled out. I think this is a transitional moment. We might try to make a run for some of those highs again, but I think this is the beginning of a pullback that's going to come and take you to maybe 2,300 again, 2310 to 20. This is where I'd find support. If you're long, be careful. If you're short, well, the good news is your biggest friend just got squeezed out, so you might have some catalyst. What happens when a short's out of the market? The buyer's gone. If the buyer's gone, that means sellers are in there and they're going to push it lower. That's my public service announcement, my public warning. You have to be aware of it. Fund is called Catalyst. Go do your research. If you want to see, for them, it really started to break down on the Fed because they're short options. When you're short options and catching yourself saying, oh, the market can't go down, all right, or Donald Trump is president, that's enough reason to short. No, it's not. That's not enough reason. One person taking a presidency is not enough reason to short 500 companies. All right? Fine then. If Donald Trump is president and you really believe that's going to bring the market down to its knees, does that mean you're not buying food anymore? Be honest. Does that mean you're not buying the car you wanted to buy, the jacket you're going to buy? No, it doesn't. That's what companies do. They sell you stuff at retail. A lot of these companies sell stuff. U.S. is a consumption-driven nation. Okay, so you're not going to stop consuming. You're going to party like it's 1999 if you can. And sure enough, that's what the market does. So it's a capitulation. Got shorts in, rinse them out. Got a whole bunch of short option players above 2,300, rinse them out. We're just short covering here on these rallies. That's all we're doing. Volume stinks. This is atrocious volume for a market that's rallied like this. All right, retail guys are excited. I can't show you one professional trader that isn't nervous, kind of scratching their head on this rally. But it goes up, you get bullish. Starts going down, you start getting bearish. What I'm here to tell you, sound the alarm and say, stop the bullish side aggressively. Stop buying dips throughout the day. Try to look to sell some rallies. Buy some dips if you want, but the bull trend, biggest buyers left the market. You do with that information what you will. I can't control your investments for you. All right. That's S&P 500. Quick review of all the markets. Let me close this. Dollar index is really weak today. It's not Mark Faber. It's Edward from Catalyst Fund. Mark Faber, I don't know. These guys, I know one guy that's shorting a lot. George Soros is putting billions of dollars. He's actually lost something near $1 billion on shorting this market since Trump got elected. He's still trying to convince the world that the market's going to go to zero. Why? Because old dog, same old tricks. He shorted the pound and made billions. Now he's just thinking he can short the S&P 500 and bring it down. Guess what, buddy? This isn't a bank in one country. This is 500 of the biggest companies in the world. And you need guys to say it can't go any higher. You need to hear people say that, because those are the guys that are actually the fuel to the fire to make it go higher. All right, that's over. I don't want to talk about that anymore. S&P 500 bullish, but I think you're going to start to see some sideways price action to some slight bearishness. My opinion has changed on it. I've done a 180 shift. Does that mean we can't break through the highs and keep going? No. If it does, I'll trade the long side. If it doesn't, I'll trade the short side. Don't have a bias. I got a hunch, but my trading plan calls to just ride the wave. Oil right at the middle, still sitting at these 53s. I'm long, small at 93, 52.93. Trying to see a break of 53. It ain't happening. All right, U.S. dollar weakness today. Gold's going back up. I think your target on gold is about 1250. I'm not on board with this trade, but 1250 is your upside target before you see some more resistance. Remember, seasonality in gold ends end of February. March, you got to start looking to sell gold. It's going to start to drop. Bonds found support at 150. Volatility starting to pick up a little bit. It's a bit of a transition of what we're used to in the market over the last 7 sessions. Let's look at breadth. Market breadth stalling out. Percentage of stocks above their 50-day moving average stalling out about 74 or 75. Percentage of stocks above the 100-day moving average crossed the 70, crossed 75. Not sure if we're going to get this 80. There's a little bit more upside left, but I think too many traders got long. I think it's things that get clobbered. Currency markets, euro rebound sharply off of dollar weakness. All right. As you could expect, currencies are strong against the US dollar. The British pound slightly stronger. Theresa May said this morning that she's going to trigger Brexit on March 9th. That's her plan. That's on schedule. Brexit's becoming real. It's received all the approval from the court and the parliament it needs. It's going through. Australian dollar, I said I wanted to short it about 77. It's hovering around there. So currencies are strong against US dollar weakness. Any questions or comments on YouTube? That's kind of what I had planned for you. Oh, also today, what you're going to see is Donald Trump is having a meeting this afternoon at 12:30, I believe. And he's reportedly to nominate Alexander Acosta as labor secretary. He's currently the dean of Florida International University College of Law. Whoa, look, he's not hiring one of his corporate buddies. He's going to colleges now. Former member of the National Labor Relations Board. Sounds like an experienced member. Probably get approved from Congress. So let's watch for that. Any questions on that? Subscribers, we're going to go to you in a minute. I look for some trade opportunities. We traded live this afternoon, so we pretty much did everything live. So you saw it. All right, guys, join for a 14-day free trial. Join the trading room. We do live trading every day. Throughout the session, we post all our trades. It's all open book. It's transparent. You get a 14-day trial. You get access to all of our education. Our futures course shows you not just the material you need to be profitable in 2017, but also live examples of it. And you have a live trading room as a resource as well. All that's free for 14 days if you sign up for a trial. I can tell you one thing. I can tell you that what you see out there and what you're used to trading on does not work in 2017. All right? There's no chart pattern that would have told you this short covering was going to happen. What you have to look at is order flow. You got to look at where traders are. Got to look at positions. You got to take into account what algorithms are doing. We do all that stuff. Look, you want to see what algos are doing? I'll tell you right now, algos are trading on this last bar, 1,200 lots on the bid side against 248 on the ladder. What does that mean? That means there's heavy bidding of 41.5. That's what the algos are working for icebergs. Okay, you want to see where people are getting? Look, right now you're starting to get some buyer strength. Delta day, your day totals are negative. Volume weighted average price, the average session volume times the contracts traded times the price is right there. We're below it. If we're below it, we got some opportunity to sell off. Volume profiles, you got to look at where volume's accumulating. What do thin spots mean? All right, what does a massive sell delta mean that is then reversed and turned into a buy delta while your algos are sitting up there picking up bids and your delta's changed? But there's buyers in the filter. Price drops, buyers jump in the filter, it reverses. You don't think any of this means anything? It does. Ditch the chart pattern, ditch the time frame. If you're looking at charts on 5 minute, 1 minute, 30 second, you need to look at other charts. That's your first step. And I'll teach you those charts. Sign up, tradeproacademy.com/free trial. See what we're about. I think you'll enjoy it thoroughly. 14 days risk-free. Take care, guys. Have a good afternoon. Subscribers, let's talk about a few trades coming up after lunch. Take care and have an awesome session. Careful. I think buying's run its course, at least temporarily. I'll see you next week at our midday updates on Monday. We don't do them on Friday. Have a phenomenal weekend. I'll see you soon. Goodbye.